What is the biggest acquisition of Microsoft ever?
Well, it came in the news this week, so let's share it with our audience.
Yes, what is it?
It is Activision Blizzard. So this week, Microsoft announced they are going to, or they have the intention to buy Activision Blizzard. And what is Activision Blizzard? Activision Blizzard is one of the largest gaming companies in the world. So they make video games. And if you don't play video games, the most known video games of Activision Blizzard are Call of Duty and World of Warcraft. Now, what are they spending on it? They are planning to spend about $70 billion to take over this company. And it is quite surprising because, especially in the times where we are living now, and we are from the Netherlands, and any newspaper is about what?
Yeah, misbehavior.
Misbehavior of people in The Voice. So when the chairs are turning around and the judges and everybody have done something wrong. And the same thing was actually happening with Activision Blizzard. So the CEO, his name is Bobby Kotick, he states that he will stay on board until the takeover is done, until everything is sorted. But he is under quite some pressure, especially from the Wall Street Journal. I saw some ladies speaking not so very positive about him. But the idea behind the takeover is that for Microsoft is that they want to start, first of all, competing more heavily with Sony. Sony is the other larger. Microsoft owns Xbox, Sony is the PlayStation, and they want to have a more prominent place in that world. And that is with the view of the future view of being more prominent in the metaverse. I always find it difficult to say. Is it metaverse? Metaverse?
Yeah, one of those.
One of those two. And just for information, it's not a done deal yet because we know what's happening in the United States. The supervisors, they are very, they can give quite some resistance when companies obtain a monopoly position in a specific sector. So they will have to give this a thumbs up before they... of course, talk about thumbs up. If you like our videos, please give us a thumb up. It's very important for us. But so they have to give their authorization still. For your information, the bid is 45% above the current price, or actually the price earlier this week of Activision Blizzard. Is that a good deal? Not so much, because by mid 2021, the price of Activision Blizzard was actually around $100.
And now is it at
it was about 50.
Yeah.
And due to the
now it's 100.
It was 85.
Yeah.
But it's still 15% below the highs before that. And that is because of all the misbehavior issues. How much is, if you think about the size of Microsoft, they're spending more or less 1 year of EBITDA, 1 year of earnings to buy this company. But it is, what you asked me before, it is the largest takeover of Microsoft in history, if it goes through.
And it's also, I think, an important strategy change.
Yeah, I think so, yeah, absolutely.
Yeah, and we saw quite some people that wanted to buy that share when the news came out, but then you are normally too late.
Well, and I found out because a client had the shares.
Oh, really?
Yeah. He said, what shall I do? Yeah, I don't know. And some of these things, you can make 30% more profit than yesterday, and it's like, take it or
it's
not.
Interesting.
No?
Yeah.
Absolutely interesting.
You talked about a jump in price this week.
Yes.
I want to talk about probably a big loss. Probably, I will say, because Netflix announced their Q4 figures on Thursday after market, and then the share price dropped 20%.
Wow.
It dropped from 500 to 400. So at this moment, the US market, it's Friday, the US markets are not open yet, but probably because I saw it stayed around the 400, so it dropped from $500 to $400, it stayed around the $400. So there's a big chance that it opens at around $400. More than 20%.
Why is that?
Yeah.
Hey, it's funny, we asked the same moment.
Yeah. Because the new subscribers, it's all, the income is always, of course, based on the amount of subscribers and the price that they pay per subscription. The amount of subscribers, they expected 4 million new subscribers, and there were only 22.5 million subscribers. And also last quarter, they expected between 8.4 and 8.7, and it was a little bit more than 8 million. So that's the reason. And I think I discussed it also a couple of weeks ago that they already changed, they increased the management of their fee in January in the US from the basic one from $14 to $15.50, so an increasement of 10. And probably they do that because what I said, the price, their income is quite of a simple business case, the amount of subscribers times the price that they pay. So they increased that already to hedge a little bit with the
difference.
With the less. So that's quite a drop. Also, Walt Disney went down 3% aftermarket. Of course, they are depending less on their online tools, but tools, programs, channels.
But they are sucked into the same flow, I suppose.
And there was also an interesting parallel. Peloton, do you know them?
I mentioned it this morning on the radio. They were in quite some. They had a really good start, I think, with COVID. Everybody was buying these machines, and then but I don't know the ins and outs. I'm going to be honest with you. The only thing I know that what the CEO said that the rumors about production stops and stuff are not true.
No.
So they make home cycling machines.
How much did they lose? Did you mention that on the radio?
No, I didn't mention it.
Around 25%. So same as Netflix.
Yeah, quite a lot. Yeah.
And they are called like stay-at-home stocks.
Yeah.
COVID-19 stocks. Because they produce all kind of equipment to train at home. And they are also in an ETF from BlackRock, the virtual work and life ETF. And that is, I didn't know that. I saw it this morning in the Financial Times. And they are 40%. There's all kind of stocks are in there that are the benefit from people that stay at home. And they are 40% below the peak. And also I wanted to mention, the Nasdaq is officially in a correction.
Yeah, that's true.
Correction is 10%.
Correction mode,
10% drop from the peak, and the peak was in November. They are officially in a correction.
I mean, like I mentioned earlier this week, also on the radio, that in the US it seems like we haven't dropped that much. If you look at the S&P, but I think more than 1,000 companies are trading at their 52 weeks low.
Yeah.
So that's. I mean, we are really in a rough territory at the moment.
Yeah, but also an interesting territory. Is it now the moment to step in again?
Yeah.
And it all depends, of course, if you have 90% of your money is invested, then it's a different discussion than when 10% is invested so far.
Yeah, the interest rates are now in the US above 1% for the first time in, I think, I don't know, 5 years or something.
Yeah. Okay, and one a little bit more deep dive in Netflix. So they were trading. The top was around $700.
Yes.
And then, so what I said Thursday, after trading from 500 to 400. And if you see the chart, and I think we will put it in the screen, then you see that from 5, that was already an important level, is dropping to 4. And 400 is a really important level. Really important level. So it's not. It can be bound. It can, if you look at it from a technical perspective. And then the next level is here, and for you probably there, 250.
Yeah.
So, but then, if you talk about 250, you talk about a lot less than the 700 where it came from in the peak.
Absolutely.
Okay. What you also saw, what you see and saw in the discussion is that because of the interest rates that they go up, that especially the tech companies will suffer from it because. They say they have a lot of debt. Now, I don't agree in general with that. For example, if you look at Apple or if you look at Tesla, but if you look at Netflix, they have around 50 billion of assets and 15 billion of debt. So that's quite in that company. I will go along with that statement because they have quite some debt.
Yeah, but also I have it here in front of me. Microsoft got $55 billion of debt, which is also quite substantial. However,
what are the assets?
371, and they have actually reduced debt because in 2021 it was 82. So they've actually chopped it with 40%. They have 40% less debt.
Yeah.
But for these, of course, I mean, it is if you go from 0 to let's say 1%, it is a big difference on your balance sheet.
You have to earn it back.
Yeah, Absolutely.
I think at the end of the year we pay the 25 euros for our Netflix subscription per week.
I think I'll cancel it. I'll cancel it.
Me not. To finish off, the profit per share was last year $6.
Okay.
So that based on the 500, that was trading still on Thursday. It was a price earning of 83. Expected was, but I think that's not the new developments are not already in those expectations. The expectation was that that Netflix would have a profit of $13 per share, so from 6 to 13. Maybe if you make an estimation, so probably the 13 is too.
So it's
too
fundamentally
positive.
more interesting.
Yeah, but if you look, then maybe it will be not 13 but 10, because that's the figure that is easy to work with. And based on the 400, that probably it will be trading today, Friday. You talk about a price earning of 40. So what I wanted to say is, based on even if you lower the expectations of the profit share, you go suddenly on one day from 83 to 40 price earnings.
Wow.
And then the analyst, but I think they still have to.
They have to make the calculation.
They have to work over the weekend. The target price, interesting to follow it. The target price was $673. So it's really interesting to see next week what the new target prices of the analysts will be for Netflix.
That's it. Let's round it off.
Yeah.
Trade safe. Give us a thumb once more. And
subscribe, and then if you subscribe, then you get automated a message when we upload our new video. Have a great weekend. Watch a lot of Netflix, and hope to see you next week.